Hi, and welcome to another short educational video from New Century Planning. My name is Bob Ryerson. I'm the founder of New Century Planning, and I'm pleased today to have Tom Mancuso with us. Tom is a certified tax assessor in New Jersey for 36 years, and Tom is going to educate us about the skinny on property taxes, why they're needed, how they work, appeals, the very controversial exit tax in New Jersey. So Tom, welcome, and thank you for coming.
Thank you, Robert. Thank you for having me.
So, without trying to get your blood boiling, I know that we've talked in the past, and we know that New Jersey has the highest property taxes in the country, on top of lotteries and sales tax and income tax and toll roads and casinos. So, it seems to never be enough for the state. Can you give us a brief history of the property tax situation in New Jersey?
Sure. Property taxes in New Jersey go back to the days of English rule. It was understood back then that the way to determine an individual's wealth was based on the amount of land they held.
Makes sense.
So what they did is they actually would tax you on your land holdings. Back as far back as 1670, there was a levy of a half penny for each acre of land that was imposed to support the colonial government. Then when they started creating more local government, that continued to go, and they continued to use property taxes. And again, it stayed the same way, where it was based on the value of your property or what land holdings you had. At some point, we changed over to a valuation standpoint, so we actually value your piece of property. And what it has become is a primary source of funding for departments like your police department, public works, parks, libraries, the schools, county government. All the services that your typical taxpayer gets on a day-to-day basis is funded by their local property taxes.
So how does a township go about determining the property tax? I imagine there's a difference between commercial and residential.
Well, in New Jersey, we have a uniformity clause, so all properties, regardless of what their use or classification is, are all taxed the same standard of value, which is at 100% of their market value. Okay, not all towns are at 100%, so there's ways to calculate it and bring their valuations up to 100%, because values obviously change yearly.
Over time, yeah.
So, but typically all properties are to be valued at 100% of their market value, whether they're commercial, residential, vacant land, other than farmland, which gets a specific exemption, because otherwise farmers wouldn't be able to produce enough crops to justify the property taxes on the land based on the land's value. So what happens is the tax assessors, the individual charged in each municipality, they are a creature of the legislature. In other words, the legislature, through the county tax board, who oversees us directly, tells us what to do. We're given our marching orders by them. It's not a local thing, so it becomes something that's just kind of kept hands off locally. You have to have an assessor, but he answers to the county tax board more or less as the supervisor or boss.
Okay.
Their responsibility is to calculate what is a property worth. We do that not by a crystal ball.
Every property in the municipality.
Property. We look at what is it worth. Typically, residential property is the best indicator of value is what is the subject sold for, if it's an arm's length transaction, or what are other sales of similar products.
We call that comparable
sales. So we look at homes as a general rule, and it's a double-edged sword, right? You want your house to be worth as much as possible, so
right.
you watch your neighbors' sales because you want to see what they're selling, because you want to know. Unfortunately, that's the same number the assessor is going to use.
Right.
As much as some residents try to argue, you can't do that to me, it's not worth that amount because I'm not selling, that is the standard that the state has set.
And if you improve your property, if you add a fireplace or a pool or a basement, or you
that would again, because it's based on value, that increases your taxes. So it would have a commensurate impact. So it's always important when you're going to think about doing work to figure out, and I recommend to my residents, bring me a set of plans and I will give you an estimate. I want you to know before you build it. And if you can do it yourself, like myself, it doesn't matter. Same thing, because it doesn't matter what it costs you to do. It matters what value does it add. So you might be able to add an addition for $5,000 yourself, but the addition adds $20,000, and that's what your assessor is going to look at.
So let me ask you this. There is a difference between commercial and residential, though. You've explained the residential. This concept, you've used the term with me in the past called ratables. If a town has all farms and residences, that's different than a town that has malls and office buildings and a lot of commercial properties, right?
If you think about it, you think of a small borough. they don't have a lot of big commercial rateable. Most of their tax base is residential. There's certain set services that they have to provide, right? And they're going to try to provide as much as possible, which are going to cost a certain amount. Now, if you don't have the commercial rateable to help offset what the residentials pay, who's paying it?
You got some high taxes.
You got some high taxes, which is why you typically find smaller towns and boroughs do have a higher tax rate than the equivalent bigger town that surrounds them.
That has a lot of
Because
commercial.
it's got a lot more commercial, and the tax base is spread out over a lot more properties.
Okay. But that may also have a lot more traffic and a lot
Yes,
more.
yeah. So it's a give and take. You have to decide. Right now there's warehouses are tremendous rateable right now, but there's a lot of pushback against warehouses because warehouses bring a lot of truck traffic. So right now we're seeing a lot of pushback against warehouses, yet the market is demanding more and more of them.
You mentioned before that over time, values change. There's a concept, a revaluation of the town.
Yes.
How often is this done? Why is it done? Do other states do it, or just New Jersey?
All towns that any state that would have you valued based on a market value,
Has to do it.
would have to do it. Now, what happens is some states do it yearly. Okay, states like Florida look at your values yearly. Okay, some counties like in Monmouth County, where we're sitting now, they do it on an annual basis. And there's some other counties in New Jersey. It was part of a trial program. There are towns that individually themselves choose to do it annually. What it does is it helps make sure that your numbers are 100%. It's not always necessary because there's other ways of doing it without doing a full revaluation. A full revaluation is just more expensive because you have to measure and inspect every property. There are ways of doing it over doing your inspections over a 3-year basis, and that's what Monmouth County is doing. I think it's 3 years, I'm not sure, 3 or 5 years. But they have to do so many inspections a year to get them all done.
And the idea, if I understand what you're saying from the township's standpoint, is to not have property values and taxes too low to keep up with inflation over time, so that the revenues are coming in. No?
Actually, no. What happens is if you don't do it regularly, there are shifts that happen in the market, right?
Yeah.
So today, neighborhood A is really hot. Tomorrow, it's neighborhood B. Well, if you don't come in and do a revaluation while those changes are taking place, neighborhood A is going to be paying on the higher values that were from 10, 15 years ago. Neighborhood B is paying on a lower value, but yet that's the place to be. So they're undervalued. Okay. So a revaluation, all a revaluation does, it doesn't bring more money into a municipality, it balances who's paying it. So to give you an idea, the way you get a tax rate is you take the total budget for the school, the county, and the fire district, and whoever else is in part of that spending. You take that budget and you divide it by the total value of the town. So the tax assessor calculates all the values of all their property, and that becomes known as the rateable base, tax base. And you take the budget and you divide the budget by the total value. So if you had, for example, a town with a budget of $50 million, and the town was worth $2 billion, if you divide the $50 million by $2 billion, you get 0.025. Or $2.50 per $100 of assessed value.
Okay. So
So your tax rate is $2.50. Now, if you apply that $2.50 times a house that's valued or assessed at $600,000, that house will be paying $15,000 a year in property taxes.
that's how it works.
Right?
Okay.
So it's pretty simple. If the value is correct, then your taxes are correct. Right? So you got to keep that in mind. That's going to come up later when we talk about tax appeals. Now, you had mentioned if someone does an addition. That same house now does an addition that raises its value by $75,000. $75,000 times that same $2.50 gives you an additional $1,875 in
So now their taxes are
Yes.
$16,800.
Exactly.
And it's justified by the increase
by
in
the increase in value.
Okay.
And that's why it's always important, because sometimes you can get carried away and you can afford to do the addition, really big addition on, but the taxes that follow it and are going to be going on in perpetuity, they might be a little bit onerous.
So Tom, staying on this revaluation subject for a minute, explain how that works. If the town hasn't been revalued in 10 or 15, 20 years, things change. What are the implications? I mean, people get worried about that.
Yes.
They're coming to my house and
Yes.
it's
Right
going to
away,
be bad news.
Yeah, they worry that their taxes are going to go up, and that's not necessarily the case. All the revaluation does is redistributes who's paying, and it doesn't bring more money into the town. You think of values of properties, they all go up and they all go down, but they don't all go up and down at the same time. So what happens if someone goes up and one neighborhood goes up too much, the other neighborhood doesn't keep up? Well, one's underpaying and one's now overpaying. So if you thought of it this way, before I gave you an example of a town with a $50 million budget and a $2 billion value, let's say 15 years go by and that town is now worth $4 billion. But the budget miraculously is still only 50 million. If we divide that 50 million by 4 billion, you now come up with $1.25. Okay, so effectively cutting the tax rate in half. So if we looked at that same $600,000
So it's not like the
house,
taxes doubled along with
yes.
it's adjusted based on the properties and the number of people,
Because remember,
all the components.
it's the budget divided by the total value of the town. So anything you do that increases the value will have to have an impact on the rate.
Sure.
So what happens
Otherwise,
is
it would be trouble over time.
Oh, there
bad
would be.
enough. Bad enough. There's increases over time that force people out, but it would really be outrageous if the reval did that. So it doesn't really.
It does not do that. No.
It's a distribution issue.
It helps pick up the basements that were finished without a permit and underpaying. It helps pick up
Changes in neighborhoods.
interiors that were renovated, changes in neighborhoods, the normal ebb and flow of values from one area to another.
Great. Okay. Let's talk about that. You mentioned an appeal. So I imagine if a lot of people feel, hey, there's no way this is worth this. I can never sell it for this. Everybody thinks their house is worth a lot when they're selling it, but not when they're paying taxes. How does an appeal work? I imagine a lot of them don't make any progress. You can describe the time frame, the cost, the logistics of an appeal. Does everybody have the right to appeal?
Yeah, every property owner has the right to appeal. You actually,
including commercial?
Yes, and they do because there's a lot of attorneys who specifically, specialize in commercials. Now, there's a lot of attorneys who specialize in residentials too. Remember, we call it a tax appeal, but it's a misnomer because you're not appealing your taxes. In New Jersey, you cannot appeal your property taxes. You can appeal the value that the assessors placed on your property.
It's a valuation appeal, not a tax appeal. The taxes are there. Yeah, gotcha.
Yes, in other states, they properly call it a valuation appeal. In New Jersey, apparently, there's for some reason we chose to call it a tax appeal, which leads people astray because, of course, you know what you have an idea of what your house is worth, and you know what you'd like to get for it, but you don't like those taxes.
Right.
That's not the issue.
But there's certainly some legitimate times when, I don't know,
there are.
Yeah.
Yes, there are.
And then so what is the time frame or mechanics of an appeal?
It depends completely on the municipality or the county that you're in. For example, Monmouth County has a different appeal date. I'm going to talk about the ones that I'm familiar with in Middlesex and most of the rest of the state of New Jersey that's not under this demonstration program that's going on in Monmouth and a few other counties. The appeal date is normally April 1st. If the town went through a revaluation, they move it to March. But generally April 1st. The assessor will send you a postcard and this is important, they send you a postcard giving you your value for the prior year, the current year, and the taxes you paid the prior year. Now,
when do you get this postcard?
You get that in February.
February.
Okay. Now, when you get that postcard, I'm going to tell you right now, do not bring that postcard to your accountant when you go to do your taxes. Please don't do that. The reason the taxes are included on there was a little gift for the attorneys that file tax appeals. Remember, people file tax appeals because most people will file because of their taxes and not because of an error in their assessment or a question about their assessment. When the state back in 1991, I believe it was, moved the appeal date from August 15th, which was the date that you used to get your tax bill that had the third and fourth quarter of that year, which caused a lot of people aggravation. They would file a tax appeal because they just got the tax bill, and then it left town scrambling to defend against tax appeals when it should have been an assessment appeal.
Okay.
So our association asked the state to consider moving it to April 1st, which took it out of the tax bill. Well, that was great. It worked great because now that notice I sent you says this was your last year's assessment. This is your current year's assessment. So you could see if there was a change. And if there's a change, you can call your assessor and ask them about it. But they threw in the taxes that were billed at the beginning of the year. Now, that doesn't mean what...
Makes it convenient for the attorneys.
Yes, but it's not what you necessarily paid. So if you're using that number to do your income taxes... Right? So if you had a tax appeal that was successful and you got a reduction, that number is going to be too high. If you had a veteran or senior citizen deduction, that number is going to be too high. Right? So you don't want to use that number, please. You want to use what your bank sends you on your statement telling you what they paid on your behalf.
Because that's the real number.
That's
okay, having said that, so they have to file an appeal. This is, I imagine, electronic these days? Or
some counties, it's available electronic in some counties, not all counties. Most of them require it by mail, and it has to be into their hands by April 1st.
Some people, you can do this with an attorney or
You can do it
on
with
your
an
own.
attorney, yeah. I always recommend that at the end of the year, you look at your value and you say, let me go talk to my assessor if you think it's too high. What happens is when it's filed as a tax appeal, it's great for the attorneys, but you have to then pay that attorney. If your value is too high and you see the assessor will most likely make an adjustment. Some assessors don't have the timing and can't do it, but most of us would like to talk to you beforehand because it saves the town a lot of money. If your value is too high.
And it saves the homeowner attorney's fees
Yes.
if it can be resolved at that level.
Yes,
in a
I always
conversation.
recommend that whenever it's possible, talk to your
Attorneys
assessor
are not going to be
at the
happy
end of
with
the year.
you.
No, I know, and a lot of them who know me I tell them, but some of the attorneys, to be honest with you, they'll tell you, yeah, the assessor will get rid of the headache properties where the value is proper, right? And there's no question on the assessment. And the reality is, if your assessment's too high, I don't want you too high. It doesn't do me any good to have your assessment too high. I'd rather you be.
How many, just out of curiosity, how many appeals are successful? I imagine a low number because most of them are.
It is a very low number, but because they are tax appeals and not assessment appeals. And when you come into the county board and the county board asks you, what do you think your house is worth? And now just as the town has a 15% margin of error above and below, as long as we don't get above 100%. It's very hard to overcome that margin of error. Okay, so the number of successful appeals it's not that great. There are some more on the commercial because it's easier to get away from that number. You're talking about much bigger numbers, but there's not that many, especially in the market that we've seen in the last 2 years.
Right.
We expected the market to take a drop this year. It hasn't happened because there's
yeah.
no supply out there,
Right.
and there's still buyers.
Even though
and there's
mortgage
not-
rates, as we
Yes.
speak, early 23 have
Yeah.
doubled from a year ago.
And there's almost, if you look at some big municipalities, when you look at the number of houses that are available to
amazing.
buy in New
So
Jersey,
New Jersey and Florida markets are very strong. Yeah, that may not stay, but that's the case. Before I want to move on to the famous New Jersey exit tax, but I wanted to ask another question on the valuation front and the tax front. Why does New Jersey have it? I'm not saying other states don't, but we have the highest property taxes in the country, and we have a sales tax, and we have an income tax, and we have toll roads, and we have lotteries, and we have casinos and racetracks. Why, without getting too detailed, why do you think all of those exist? Is it just the state's too generous, the population's too large? I know it's the most densely populated state. Why does New Jersey need all of those different streams of income?
Well,
And did you want to? I know you wanted to talk about our taxes here are very high, but that includes schools, which a lot of states don't. Did you want to speak
in
to
other
that for a
states,
minute or
the
two?
schools are funded differently, right?
But
They're
directly
funded
by the
state. In our case, they're funded locally, right? The state, over the years, since 1960, has come up with a number of ways to generate revenue that they could then share with the municipalities. I can't tell you that they share what they collect, and that's the problem. So in 1960, they gave us a sales tax, right?
And what did they say?
The sales tax was going to be collected to help lower property taxes because the state was going to collect this money and share it with the municipalities.
To lower property
To lower
taxes.
property taxes.
Did that happen again in the last
Well,
30 or 40 years?
in 1975, they gave us an income tax. If you remember, when we didn't have an income tax in New Jersey. It's hard to believe.
That's right.
Before 1975, the purpose for the income tax to help lower your property taxes.
Okay.
So there are
Probably
a
when we
number
had
over the
casinos
years.
and lotteries, all these
Yeah,
items
if
are
you
going to
think-
help lower property taxes.
Yes, over the years, if you think of the number of revenue generators that New Jersey has
Incredible.
created, the problem was, and if you go back to your old tax bill, your tax bill used to tell you how much lower your property taxes were that year because the state required the towns to put it on there. Remember, the state oversees the system, right? So they tell the towns what to do. They required on your tax bill to show you how much lower your taxes were because of the contribution of the state. Well, what happened was that number started going down on a yearly basis, and people started questioning. So the state said, take the number off. Okay? The state of New Jersey has, a 48 or $50 billion, almost a $50 billion budget. Now, I want you to think, and this is what I tell my residents when they come in and give me a hard time about what they're paying to the town. I say, when Governor Corzine shut the state of New Jersey for 2 weeks, what services did you not get? Your fire department was there, your local police were there, the library was there, we were here, your schools were open, your local parks were open. What services did you not get?
Right.
So think about that when you think about the money that you send to the state of New Jersey and all these fees and taxes that were
Enormous amounts of
supposed to
money.
come to lower your property taxes. The towns provide most of your services. The county provides some, but the towns provide all of
And
your
so
services.
what you're hinting at is, even though it's been decades, the bulk of the money ends up at the state level and does not.
It doesn't come back.
End up.
It does not come back. There's there's some good websites out there. There's the League of Municipalities has a very good short synopsis out there on property taxes and how the state has taken that money. There's right on the League of Municipalities, a short history of the New Jersey property tax and long road to reform. They talk about the different times the states tried to reform the property tax system and look at it and how they never get there. But it's a good way to look at the article, and it shows you in how many different funding forms the state has come up with to supposedly help lower property taxes, and how the state then takes from that to help themselves with their budget gaps that doesn't come back.
Let's finish up with there's a notorious so-called exit tax in New Jersey that people get upset at, and it's a bit of a misnomer. And I think I wanted you to explain, if we go, for example, to Wildwood, some resorts on the beach here in New Jersey. A lot of people, maybe in Pennsylvania or other states, own those properties. If they sell it, they're not going to be paying any tax. So New Jersey imposes at the time of sale, what is it, a 2%?
They call it an exit tax. It's not something that I deal with, but I get the question quite often because everyone's like, "Oh, New Jersey has an exit tax. If I leave, I got to pay this." It's an income tax, and because you're paying on the profit you've made on the sale of your home. If you're a New Jersey resident, when you file the deed, on the back of the deed, your attorney's going to fill out that you were a resident, and that you'll pay it when you do your income tax. But if you're from Pennsylvania and you own a home in New Jersey, a summer home, and you sell it, or from another state and you sell it, you don't file an income tax return. So the only way for the state to get it, the only way for the state to get that money is by collecting it at the time of sale.
And then if there's no gain, the Pennsylvania person files a New Jersey return and gets a refund
and
back.
Gets the refund, yeah.
Okay.
Yeah. The state is willing to send you money back, but they're not willing to trust that you're going to pay it. And that,
okay.
As much as people love to pay taxes.
And then what about, is it, because it's so high and other states are so low, there's a trend of people selling in New Jersey and, retiring to Florida or South Carolina. If somebody leaves, does an exit tax apply there? Is it just the state trying to collect their last tax return ahead of schedule? The attorney, you said there's some boxes on the back. I mean, people have exemptions. They may have a gain, but they don't own any taxes.
It would depend on each individual, and that's something where an accountant would come in, or the property tax attorney would know, the closing attorney would know which boxes to check off on there. Because if you're a resident, then I guess they assume that you're going to get it, you're going to pay it if there's a profit at the time you do your income tax return.
Okay.
But I know specifically for out-of-state residents, they have to pay it because there's a check-off on there.
And then the last thing, there's who gave us the millionaire tax?
I think it was under the McGreevey administration.
So if you sell a house over $1 million, there's a separate 1%?
1%, yeah,
tax.
On top of
That's
the sale
just
price.
Flat tax to pay us.
Yes.
So you were telling us before we started filming that you've seen a lot of houses sell for $9.99 and a very expensive sofa for maybe $100,000.
Yeah, we see sales of homes that
furniture.
Yes.
So people respond to tax incentives.
Yeah, it's amazing because we always look at our elected officials, and we criticize them because they might not want to pay taxes. But I'll be honest with you, nobody wants to pay taxes, right?
Well, and if you're fortunate enough that your house is now worth $1 million or more. That's
but it's a chunk of change.
To
take out.
My house is worth over $1 million. I got to pay an extra 1%.
That's on top of all the other things you're going to pay.
Do any other states apply a millionaire tax?
That I don't know. Okay. I don't know. But I think we have more millionaires in New Jersey. Maybe.
All right. Well, at least we learned a lot, and it was eye-opening. And I want to thank you for your time today. And people can watch this on our website, and I can certainly refer them to you if you're willing to answer a question or two. Sure. On this subject. So thank you so much, Tom, for coming in.
My pleasure.
And
Thank you very much.
Thank you all for watching. Take care.
Thank you.